Hello, everybody, and welcome to Confident Compounding with Corey Kramer. Today, I'm going to be analyzing Block Inc. stock, ticker XYZ. This one came in by request down in the comments of one of my other videos quite a while ago, and I kind of delayed doing this one because it's a bit of a tricky one for me to analyze. As always, not individual investing advice, just how I analyze stocks. If you have any requests, put them down in the comments. I will get them up on the chalkboard behind me, and I'm going to be getting through these much more consistently for the rest of the year. So, Block, ticker XYZ. Let's look at what they do first. Let's take a look at what ChatGPT had to say. Okay, Block, formerly called Square, is a fintech that operates a number of platforms and products aimed at both businesses and consumers. Here's a breakdown of what it does, how it makes money, why it's structured the way it is. Okay. So how it makes money. We can look at some of these important parts here too. Afterpay, which is buy now, pay later, Bitcoin wallet, self-custody Bitcoin wallet, streaming service. I didn't actually know that one. And then several crypto blockchain initiatives. Processing fees is the main way they make money with Square. And then they also have some subscription fees, financial services, consumer transactions, buy now, pay later, and hardware sales. So I think it's a true kind of financial company. One of the reasons why I didn't, there was a period where the metrics looked pretty good for it, and I was just kind of slow to potentially buy it. I'm talking back in probably 2023, like the end of 2023, right in here. It kind of met a lot of my parameters for growth stock, but I was slow to purchase it, and I never did because one, they have this Afterpay that they bought. And then getting into Bitcoin and crypto. So the main things I would say is, especially when it comes to the loans and also just their normal payment processing business, is it's probably pretty cyclical. So the loans are definitely cyclical, and they can carry danger with them like any lending place. I don't really own hardly any pure financial stocks. I have some that have financial aren't, like if they're big, like Super App or something, but I don't have any banks right now that I can think of. Hardly any investment company like investment banks or big financial company. I don't really have any other than Berkshire, if you count them. Again, if it's not, it might be part of like a diversified big company. But the issue is, whenever you're dealing with any kind of lending, you don't know how much risk is really being taken until it's too late, basically. And so I like to only really buy banks and other financial companies that are similar if they have a long history and I can see how they've done during downturns. Now, that's not a perfect way to do things, but it's a good way to show how much risk that they've taken in the past that got exposed during a recession, during a downturn. And I prefer the ones that have shown have proven that they're not taking as much risk. Now, it doesn't mean they can't take more risk this time around than the previous time, but it does rule out a lot of lenders that maybe had loose standards, which will do well during booms, but do poorly, even go out of business during busts. So that's one thing to think of. The other thing is just the normal processing business, transaction processing. If it's tied to like a lot of retail, that's obviously very cyclical too. And so now you have two things that are not counterbalancing each other, but that are kind of amplifying potential downside during pullbacks. And then, so that would be the main reason that I held off on the stock. And then the third reason is crypto. I'm pretty anti-crypto in general. I'm not opposed to making money on like Coinbase or some like a company that's making money on transactions of crypto, I would consider. So I wouldn't completely rule some of that out, but yeah, in terms of like crypto finance and things like that, I don't really want to touch any of it. I didn't look closely enough at what Block was actually doing with crypto. But when you put all those together, it's a lot. I feel like it's a lot of risk. Even the traditional business is a lot of risk in a downturn. And we don't know how bad it will do in a downturn. So we had this crazy boom here. See how far it's down off the high. 75% off the high. It's basically trading where it was 8 years ago. Yeah, so hasn't really, now earnings have been growing, and if they do grow 38% and 29% the next couple of years, then the stock will probably do fine. But you can even see with their adjusted earnings, they had a 42% decline in 2022. This year is expected to be 25% decline. We're getting cyclicality here, and we're not even officially in any kind of a recession. So we already see kind of the signs of that potential weakness, and then the stock is trading at almost a 30 PE. So on these fast graphs now, if they have fast growth like this, they adjust the fair value ratio, so it's 24, like a PE of 24. But you can custom your own. So this is a 15 PE value ratio, this pink line that I just created myself. So it's actually, a 28 PE is like 50% higher just off that kind of long-term valuation. And then you got to ask yourself, well, where is their future growth coming from? I don't really understand enough and have confidence in where it's coming from. So when you put all those things together, it's just an avoid to me, or a too hard. If we look at GAAP earnings, like basic earnings here, you can see they actually went fully negative in 2022, so it's probably even worse than it seems, and down 50% this year. So it's just, I think, too risky for the type of things that I want to invest in. But I was a little tempted, like right back in here. And it would have been a 50% upside from there if I would have bought it. But again, you never know when like kind of the bottom's going to fall out and of businesses like this one. And I would be much more tempted if it was a 15 PE and not close to a 30. So it's like there just isn't any risk priced into this as far as I can tell. Now, it's not in total lunacy territory like in 2021, but that doesn't really matter. It still looks pretty expensive to me. So I would say Block is an avoid for me, potentially at a very low PE if they prove they can survive a downturn, maybe coming out of a recession. Once they've kind of shown that they can survive that, that might be, and if I had a bunch of cash or something, I might be tempted to take a small position. That'd probably be about the only situation I see myself doing that. Okay, I think that's it for this one. I do buy stocks. I have weekly picks on Patreon for $25 a month, where each week I buy and find, if I don't already own it, and find the best stocks that I can in the market. So even though I don't have a ton of buys on the public YouTube channel, you can check that out if you just want to find out what I think is the best stock that week. I also have a free tier on Patreon where I'm going to be posting a lot more analysis that don't show up on the YouTube channel, so check that out. Those links are down in the description. Thanks a lot, guys.